Hello, chart watchers, and welcome to this Market Watchers live show with your hosts, Tom Bowley and Aaron Swinlin. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Okay, this was the 2-month view. You can see the Dow, which had tried to get back into positive territory, now down near the low of the day. Same with the S&P, the Dow, and the NASDAQ, or S&P, NASDAQ, and the Russell 2000, I should say. 10-year Treasury yield continues, rising today, although it is off its high. Volatility beginning to pick up. Financials rallying about a little over 1%. Banks leading that move to the upside, certainly buoyed by the higher 10-year Treasury yield. Do want to mention that crude oil prices look like they have reversed somewhat. They were up nicely earlier, but they are now turning more negative. And then energy, still in a beautiful uptrend. I mean, we've got to give it a little bit of a pause here, but definitely energy weakening today. The consumer staples continues to perform exceptionally weak, down more than 3%. There's a lot of reasons for it, but one of them is the awful performance of the tobacco stocks led by Philip Morris to the downside. Philip Morris down 16% for the day, just one day.
Yes. I was telling it for those, we usually are very transparent about our holdings, and Philip Morris is in my very, very long-term hold situation. So really not fun to look at my portfolio today, but thankfully I've owned it for quite some time and, take a hit on the chin now and then. But boy, that was a really big punch in the face. So
yeah, well, a lot of these big companies, I mean, if I was going to be a buy and holder, these are the types of companies, though, that I would be interested in owning. I do want to mention, too, that it didn't come up in today's session, but American Express had a really nice report. They raised guidance, and I know that that was your pick among those 5 large companies that we had that poll last week of which chart looked the most bullish. Mm-hmm. And I know you went with American Express, and I haven't looked at them all, but I believe American Express is doing better than any of the others at this point. So just wanted to point that out.
Well, thank you. I appreciate that.
I won't mention that my pick was IBM.
Yeah, well, I think you were in agreement with some of the viewers at that time, too.
Yeah, it was, I think Schlumberger was the #1 pick, if I recall. And then I think American Express was second. And there were a number that agreed with me, IBM. And actually, the IBM chart was pretty solid. I don't know if my screen is still up, but I can see.
Yes, it is.
Yeah, IBM, looking back, and I think it was the relative chart that I had looked at on all of these. And IBM was starting to show some relative strength here. Versus the S&P 500, and you could see that the computer services group had broken out versus the S&P 500. So that was one of the reasons why I liked it. Of course, I don't hold into earnings. IBM is one reason why, and then of course, Philip Morris would be another example of why. But then you've got the other side of the coin. You got the Netflixes of the world that jump up with their earnings from time to time, and it just comes down to whether or not you're willing to take that kind of risk.
Now it's time to bring in Mr. RRG, Julius de Kempenaer.
Hey, Aaron.
How you been doing? We haven't talked in a little while, Julius.
I'm good. And actually, today is a great day because now it looks like summer has started. It's 28 degrees Celsius here. I don't know what that translates into Fahrenheit. Probably something like 85. But very, very nice day considering that. I don't know, like 3 weeks ago, we still needed to wear gloves and beanies and big jackets and stuff because it was so freezing cold. So, so even that alone makes me happy.
Yeah, 3 weeks ago, then you had weather similar to mine, and now today you have weather similar to Aaron. That's how it how it equates.
That's right. Yeah, we're going the right direction. Yeah. We're going the right direction.
No doubt about it. What do you got for us today?
All right, guys. There's 2, maybe 3 things I'd like to do. We're going to talk about the rotation in the Dow Jones Industrials, following up on the most recent blog that I wrote. But there's one thing that I want to bring to you on a more, maybe, let's say, theoretical point of view. And that's using the $1 benchmark to use RRGs for both a relative and an absolute handle on what's going on in the universe. If you don't know what an RRG is, please go to the chart school. There's a brilliant article explains pretty much everything. If you then still don't know what it's all about, feel free to post any questions you have under any of my blogs. And I will monitor what's going on Scan. But please use my handle on Scan so that I get a notification, because I'm not looking at that every day. Now, as you may know, RRGs in general show you the relative rotation of a number of stocks around the benchmark. Now, the trick is what we can do with that benchmark. And I have prepared, by the way, there is an article here, that's a blog article of January the 15th, that pretty much explains what I'm going to try to explain to show you in a few charts in like 1 minute that we have right now. And what I've done is I have positioned two RRGs next to each other. And I hope this is visible on your screens. It's pretty cool on mine, but I hope you can track it.
It looks good.
The left one shows the members of the Dow Jones Industrials against the $1 benchmark. And the second one on the right shows you the same universe, all the members of the Dow Jones Industrials, against the Dow Jones Industrials benchmark. Now, you immediately see that on the right one, where it's a proper RRG with relative rotation, that it is pretty much spread out over the whole plot, which is logical because in the end of the day, it's a closed universe, so everything should even out. If we use $1 as the benchmark, we pretty much get an absolute price benchmark, which means that everything will move in tandem. If the market goes up, everything will move to the top right. If the market goes down, everything will move into the bottom left. And you can see that when we animate that chart for a year. And you can see that, you know, maybe I should add a little bit of a tail to make it a little bit more clear. When the market is, here you see the most recent downfall. This is a very good example where the whole market is going down and everything is moving to the bottom left. This is where the whole market is going down. And you will see periods where the whole market's going up. You see pretty much everything going top right with a few exceptions. When the market is going sideways or moving in a sideways range, you will see some going up and some going down. So this is how you can use RRG to get a handle on an absolute price movement. But watch, what I've done here, let's put this to the end. I have added the Dow Jones Industrials average as a security on this plot. When we highlight that, and you can do that by simply clicking on that line, you will get the position of the Dow Jones Industrials versus an absolute benchmark. And you can see that this also rotates around. So this is when the Dow is in an uptrend, goes down, loses momentum, and now we'll have to see what's happening. It looks to be bouncing up a little bit again, but you can see that this is moving around. Let me max this out, and you see that all the members will move around that Dow Jones Industrials like almost like a galaxy. And this is what I want to show you, because this is an absolute RRG, but you can also monitor the relative position versus the Dow Jones Industrials, because all these little dots here are relative to the Dow Jones Industrials. And if we bring that back to today's date, and we're both on a weekly scale, let's get this out. We know that the Dow is here. Make a mental memo of that, because when I unhighlight it will be gone. It'll be here. But look at the relative positions. So GE is easy. That is in the top left. Look at the real RRG. It's in the top left. Pretty much GE, Merck, Apple, and Intel are the top row, and they're all slightly lower. It's exactly the same here. This scale is a little bit stretched, so you see it a little bit better, but they're all going a little bit lower, working to the right. Then you see Cisco and BA, and you see Cisco and BA. You see CAT and Walmart, Home Depot in between. So the relative position of each individual stock is exactly the same versus the Dow Jones Industrials, but this benchmark has moved. That's why the whole universe moved. So when you want to get a handle on the relative and the absolute position in one chart, you use $1 as the benchmark. You add the specific benchmark that you want to use as your gauge to the universe, and you'll get both in one chart. It's a little trick. I started using it a while ago, and I keep going back to it because it gives you a proper handle on general market movement in one chart. Another thing that I started doing, which I want to share with you, is using daily and weekly RRGs together, because I think that combining these two is really powerful. If you want to learn a little bit more about that, please go to Chart School and go to the search box, search the Chart School articles, and you will find the top one, the complete introduction to RRG relative strength, and go to weekly versus daily. And you will get an explanation on what the difference is between weekly and daily RRGs. It's still one of the most frequently asked questions about RRG. The short answer is it's exactly the same as how you should compare a daily and a weekly bar chart to each other. Now, how can you use that to your advantage in your day-to-day work? Positioning, again, these two screens next to each other. And what I've got here is the RRG for the Dow Jones Industrials on a daily basis, on a daily scale. And I've got the same universe on a weekly scale. Now, there's two things you can do. So what I did is I loaded up these universes, set one to daily, one to weekly, and I sorted both on symbol. You can sort them on every column, but symbol is easy because now I know that the two tables are on, every stock is on the same line. So when I tick, what I usually do is I give it a little bit more space here on the outsides, just for visibility. And now you can work your way through this universe, picking Apple and Apple. And here you got the daily RRG for Apple, and here you've got the weekly. And the problem is that when you start scrolling, this whole thing starts to move off. The trick that you want to use is use Control, arrow down. And you see that it now jumps to American Express. I can Alt-tap to the other one, Control down, and I've got American Express. I see what's going on here. Control down, Alt-tap, Control down, BA. Alt-tap. So here you can basically work your way through the whole universe. I do whatever you like, but I found this a very cool way to keep a handle on the absolute or the daily and the weekly constellations on the RRG charts, and make up my mind what's going on, and also make up my mind on what I would like to see and dive deeper into in my regular charts. Because don't forget, RRG is a great tool to visualize what's going on your universe, but I never recommend people to only use RRGs, just like I would never recommend anyone to only use, let's say, the RSI. You know, you should take everything that we have in technical analysis and on stockcharts.com as pieces of the puzzle. And I believe that the secret is in putting together the right pieces of the puzzle at the right time.
Hey, Julius.
Yes, Tom.
I have a question because this is very interesting. I've never seen you do this before. And I mean, when you're looking at this, I like the fact that, you know, at the same time, you can look at kind of the longer term picture and the shorter term picture. Is there a favorite setup of yours? Like if you're going through this list, for me, I kind of think Caterpillar looks kind of interesting because it stays on the right side of the screen and it's in that weakening quadrant, but it's starting to turn back up. And on the daily, you got it going exactly the way you want, from improving to leading. Is this, would you say this is like the type of setup that you would want to see? You got it.
You got it. As a matter of fact, I wish I could switch my webcam on right now and show you my notepad, because I'm gonna. This is my promise to you. The title of my next blog is written down here, and I'm gonna snap a picture and put it in the blog so you know it's true. is called Eyes on the Cat. That's gonna be the title of my blog, and I swear to God, it's written here on the top right of my corner with arrows around it. Because when I was preparing for this webinar, this was exactly what I saw. I saw cat on the right-hand side. On the weekly, it started moving through weakening, and I was like, "Oh, is that going to go all right?" And then it started losing a little bit of momentum, and it started curling upwards again. And we know that stocks that are in the weakening quadrant, but they start curling up before they move into lagging, that's a real strong constellation usually. And then combining that with what we see on the daily, where it made a complete rotation basically, and we can see that if we just make it here, made it. Here you go, last, and it now started to go back in sync with what we see on the weekly. So this is lining up perfectly. So all eyes on the cat. And what I had this prepared for a little bit later in the show, but never mind, we can do it right away. What I then do is say, okay, this is very interesting. I'd like to know more about this. Then I use control. I don't click right away here because I lose my RRG. So when I use control, click. Hang on. Control click. That's my mouse pointer that doesn't allow me to do that. Bummer. Never mind. I go back to the chart of Caterpillar, and then I start studying the chart basically. And what I see on this chart for Caterpillar is a super strong relative strength. I can immediately see why it moved from leading through weakening, because we were just pretty much digesting this whole massive relative up move that started. It's 2016 already when it bottomed out. So it has been a magnificent move. We've seen this correction in price. It only corrected so much in relative strength, and you see that the relative momentum is already starting to turn up. I'd like to check the weekly version of that chart for a little bit shorter term gauge, and then I can see even more detail, and we see that it's already starting to move over, crossing over. That's what we see on the RRG. You see that the relative strength seems to be getting out of that doldrums that we saw since the beginning of the year. And what I really like is this. Shall we do it? Let's do it on the weekly. It's a little bit nicer pronounced because I do love wedges. They are super strong patterns.
You're not going to believe this, but I had just annotated cat on my screen, and I annotated the wedge.
Very good.
We're on the same.
Tom, you know what they say about great minds, right?
Yeah, but I don't have one, so I'm not sure what that says about you.
No. I was trying to compliment you, Guy.
I know. Thank you.
Go ahead. So this is the one that I'm looking at here. Right. Look at that. And then look at that one here. For me, trend lines and stuff is super subjective. So if you, somebody once told me, if the thicker you're adding, the more pronounced the pattern. So whether you draw that line here or here, I think I probably prefer this one. You just ignore those two spikes on the outside. But this is a pretty significant pattern. And as we all know, a breakout of a falling wedge on the upside gives you a minimal target of the starting of the pattern, which in this case would be just above 170. So there's still plenty of upside. The trend in relative strength is undeniable still there. It's starting to curl up both on the daily and the weekly. So all eyes on the cat. I do believe that you're right, Tom. This is one of the probably most promising stocks inside the Dow Jones Industrials for the moment. Let's save that. Upload. Now I completely lost track of my storyline. All right, I know. I was talking about these matching those two. I guess you got the message right now about what we're talking about. I want to go back to my latest blog that was published last Sunday, I believe it was, April 15. And I highlighted the rotations of Apple and Walmart. And let's just bring up the RRG as I was using it while I was writing this blog. And the way I look at things, I always start to look at stuff that's moving on the outside. So, I had a look at GE, I had a look at BA, and then I came across Apple and Walmart. That Walmart was pretty much a no-brainer. That's lowest on the RS momentum, heading just into the lagging quadrant at a negative RRG heading. Pretty much the only stock in the Dow there that's doing the same, maybe HD, but that started already to curl up. So I wanted to know more about Walmart, and I always try to look at something that I can use to offset my general market risk when I do that, because I'm not, I'm not too much into outright shorting a stock. I always like to offset it with something else. If you're a portfolio manager, you could think about overweighting Apple and underweighting Walmart, or maybe just kicking Walmart out of your portfolio and just keeping Apple. Many ways to play this game, but this is how I look at it. And what I like to look at is, and I've put that in a chart here, this chart, is to see where they cross. So if you have one that is at a positive heading, like Apple moving in a positive direction and Walmart in a negative direction, when they cross over on the vertical line, so that's the horizontal axis, so on the RS ratio line, when Apple crosses that way and Walmart crosses that way, that's pretty much, if you want to talk about signals, I'd say this is sort of a signal that you might want to look for in terms of buying Apple and selling Walmart. Now, let's go back to the previous one and bring the live version of this chart and see what has happened since then. And I just saw that this is great to talk about, because Apple is way down and Walmart is outperforming today. But we're looking at the longer term weekly picture. So I still believe that this trade, this idea is still pretty valid. As a matter of fact, today would be a good day to implement something, because I do think that Apple is still one of the leading stocks inside the Dow Jones, and Walmart is one of the lagging stocks. This is the up-to-date position. Let's fit it a little bit down, and we see that the Walmart has continued into the lagging quadrant. Apple is still moving into the leading quadrant. If we really zoom in, we see that the latest distance is quite short, which is what you would expect if a stock starts to decline against your trend. And that brings me to, I saw a question in the chat box earlier, someone asking if I could explain, among other things, but I'm going to use this one, the distance between the observations. The distance between the observations on the tails give you an idea about the momentum of the move, give you an idea about the power of the move. And you can see that Apple has a relatively long tail compared to the rest of the universe. It's got a much longer tail than, for example, Coca-Cola. It's got a super long tail compared to, for example, Goldman Sachs and Verizon, that is, right, V. So this gives you a gauge. When you just have a look at the chart and you look for the long tails, you can see where the moves are. So this one here, what's that? CVX. That's also an interesting one. I would not mind to have a look at that one. Apple looks good. Maybe Merck. BA definitely is one of the longer tails. But CVX and Apple really stand out. And GE to a lesser extent on the left-hand side. I'm going into GE a little bit later on, because that is an interesting move to talk about. So this is how I got to my idea, being positive on Apple and negative on Walmart, potentially, offsetting these two into a trade, whatever way you want to do it. Long Apple, short Walmart, overweight Apple, underweight Walmart. Keep Apple in your portfolio, toss Walmart, buy options, buy calls on Apple, buy puts on Walmart. Do anything that will give you some sort of an exposure, positive for Apple, negative for Walmart. Keep in mind that it is very well possible that Apple will, I don't know, turn around and maybe even underperform the Dow, but the trade could still be positive if Walmart continues to tank and drops much faster than Apple declines. because then the difference is still positive. And that's the whole thing about relative strength. You're only trying to play the difference between, in this case, two stocks. Now, the other trade that I was looking at today, based on the same RRG as it is right now, and again, I'm looking on the outside, on the outskirts, is GE and BA. Now, remind you, I told you that to look for the vertical cross as a sort of signal. The other way you can look at this is on the horizontal way. And there you can see, maybe we have to expand it a little bit more, that these two crossed like 3 or 4 weeks ago. This is a momentum cross. That's much more aggressive than when you look for a relative strength cross, which is the one that had Apple and Walmart. So BA and GE against each other is a pretty aggressive trade, probably a little bit more of a shorter term trade. Because what's happening here, BA is on the right-hand side. It is the strongest stock in the universe as per the RS ratio line. It's above 100, well, maybe together with Cisco. It's one of the strongest stocks inside the Dow. No doubt that GE is the weakest stock inside this universe. And the fact that it is at a powerful move, it's a powerful momentum move, it has the strongest momentum, but it is very, very far away from crossing over to 100. And that's where we kind of think that the relative trend is changing. So what we're playing here is a counter trend move in GE against a counter trend move of BA. And again, what you do here is you just pick up the chart for, let's go here, there's GE, bring it on. Come on, GE, here you go. You see GE is still, tanking down, there's no doubt about it. It's picking up a little bit of relative strength, but not massively. The keen observer knows that I'm looking against SPY, so let's make that a proper RRG chart against the Dow Jones Industrials. It doesn't change much. You see the pickup in momentum, but this RS ratio line, man, it's way down. It's way down. So I'd be very careful with that. This is really a recovery. There is no sign in this RS line that it's really bottoming out. But the shorter term looks a little bit better. So here you go. Picks it up. And what I'm looking at here could be something like a double bottom. It'll be only a short-term one because the weekly trend is clearly still pointing down. But for the daredevils among you out there who'd like to, a little gamble, maybe a little bit more risk in your portfolio every now and then, this could be a very nice double bottom breaking out. Needs to break above roughly $14. And after that, I'd say you have potential towards 1550 probably. Now let's put that against, no, don't change, against the other one on the outside, which was BA, which is the super strong stock that we had in the Dow for a long time. That's now rolling over. And you can see that that is correcting a little bit. Is the up here. The momentum is rolling over. Relative strength is sort of in the middle, not doing much. And if you bring that to a weekly version, you will see that it is at super high levels. I have not done a lot of research yet in studying divergences between RRG lines and relative strength, but this looks like divergence. I mean, we got a lower high in the RS ratio and we got a lower high in the RS momentum, while the raw RS line is still making higher highs. So this could very well be something like a pause into this relative strength move that we've seen now, and we could play that little bit of a correction coming off these highs, coming off these extreme levels against GE. Again, it's a bit more of a gamble, it's a bit more of a risky trade than the Apple Walmart that we just had, but different people, different tastes, different investment horizon. What's a trade for one person could be a long-term investment for the other, and vice versa. I believe that I am running towards the end of my session. Tom, have you read if there are any other questions that I can address right now, or is there something that we can do, or shall we just leave it at this for the time being and circle back to me if needed later on, because I will stick around until the end.
I think probably the first thing would be good is just maybe to bring up the poll. I'd be interested to see.
Yeah, all right. Let me see. On the poll, all of the above: wins, sectors, individual. What's an RRG? So still 13% doesn't know what an RRG is. Okay, so I'll address that in another post. I will point out some resources. That's not a problem. We have plenty of those, and I'm actually glad to see that the majority is using all of the above. So also sectors, also individual stocks. Hopefully people start using asset classes a little bit more, because it's a very powerful tool to show asset class rotation. Maybe I have to push that a little bit more and give a little bit more examples, which I will do. And another thing that I really like RRG for doing, and becomes more interesting because I heard you talking about the treasury yields, is to actually put the various maturities of the yield curve into an RRG. And you can get a handle on the yield curve movement, and also currencies. You can get a very good handle on currencies. One of my favorites, actually, especially if you combine that with ETFs. That is a very powerful thing. I've written a few blogs about that, but I can imagine that not everybody always reads every blog. But I'll circle back to those as well. So that's for the blog. Let me quickly see. Let me go to that question on, because I had the distances, but there was a little bit more. Where is it? Oh yeah, here. So can you address the length of the lines, gap between dots, and distance from the benchmark? Okay, so the gap between the dots I've just explained, and the gap between the dots, that's the week to week or day to day observation. So on a daily RRG, every dot is a week. On the weekly RRG, every dot is a week, but be careful. On a weekly, the last dot updates with the last known close. So you will see, let's say on Monday, on a weekly RRG, at Monday's close, the last dot will only show you the move from last Friday to Monday's close. On Tuesday, it will show you the move from last Friday to Tuesday's close, and so forth, until it's Friday again. And then the observation is graved in stone. It will stick there, and then we start a new segment of the tail on the next week. So on a weekly RRG, the last segment is fluid. So for example, Apple. We see Apple now that you saw that very little gap. Let's just think about something wild. Apple outperforms the rest of all stocks for the rest of the week, goes up $10. Then you will see by the end of Friday, you won't see that small observation that we're looking at right now, but you'll see a big segment pointing higher for Apple. I hope that I made it clear with this. Clearly, the gap between the dots dictate the length of the lines. So that's your power gauge. That's your sort of momentum gauge, but momentum on two axes. So it's momentum relative in relative strength, and it's momentum in momentum of relative strength. And then the distance from the benchmark, that's interesting because the best signals, the most interesting alpha generating possibilities, they exist on the outside of the RRG. So if we quickly move back to an RRG, you will see here that the best opportunities, the biggest alpha generating opportunities are on the outside. So GBA, clearly GA was an alpha generator when it was on the outside. The same for BA, because this BA moved over into this one has been on the right hand side forever, and you see that has been on the outskirts. I can't even go back far enough. I need to reload, so we won't do that. But for the last year, BA has been on the right-hand side and be on the outskirt for a very long time. So that's where you typically find your big moves. Very close to when a stock moves very close to the benchmark. It's not deviating too much from the benchmark, and that's not good for relative strength because there's not a lot of alpha opportunities there, especially when the tails are short. So short tails close to the benchmark, I almost skip them immediately. What I'm interested in is a long tail that moves right through the benchmark and doesn't stay there for a long time. I used to joke when you load up an RRG with a lot of stocks and the ticker symbols become unreadable. I'd used to say when you cannot read the ticker symbol, the stock is not worth looking at. I hope that makes clear, because the further out, the better you can read the ticker symbol.
Well, one thing, I want you to hang around here for a couple more seconds, if you don't mind.
I will.
One of the things that we do now in the 10 in 10, which we're going to get into, is Erin takes all the requests and puts them on an RRG chart. So what you can do is when she does that, if you could maybe point out a handful, or may just be 1 or 2 stocks, or maybe there's a handful that really look interesting to you, and maybe we can pull those up as part of the 10 in 10. Can you do that?
For sure.
All right.
Excellent.
That was a great presentation, Julius.
Thank you.
Absolutely. And Tom, if you could take a peek at your producer chat. I know he's got some messages there for you.
Okay.
And let's see, let me get these all put together for this. So yeah, I know a lot of people ask about that, Julius, about moving, if a stock is farther from the center, is that better or worse? So I think that helps clarify that.
Yeah, I think I just answered another question on how far away the rotation is. I saw that passing.
All right.
I'll check the. You guys take it over, and I will go look for other questions in the chat box and see what we can deal with.
Excellent. Okay, so I've got to get all of these in here properly. So I'm going to go do that. I'm going to show you all how you can do that very quickly too. As I do this, I was keeping an eye in the chat room for a lot. So let me get this ready here, and then I can pass it on. One of the other questions to Julius, and I don't know if you addressed this as I was doing some of this, was that the thickness of the tail versus the thin tails. I know.
Yeah, so the further away from the benchmark, the thicker the tail.
Mm-hmm.
So thick tails are far away from the benchmark to highlight the importance of the rotation.
All right, excellent. Yeah, it looks like I just deleted my list, so that makes it really fun.
That's very helpful.
Yes, yes. Okay, so I'm going to share the screen, and then all of you can see how you can add stocks very quickly to a...
I'm sorry. Yeah. I'm just reading a comment here that RRG is an F-16 without ECM.
There you go.
Being ex-Air Force, that's funny.
Okay, so here's
know what ECM is. You've been Air Force.
Yeah, it's been a while. It's been a while.
Electronic countermeasures.
Yes. Yeah, I actually worked in the SDI programs for my very first job. So that was really
there you go.
Quite interesting. So if you just go to the many, add charts to the list, this is how you could find and add them. I think it's helpful. For a long time, I would just do it one by one. So it was very helpful to have it come up in a way to do this all at once. I know I was trying to add all the sectors or one of the sectors, and I had so many that I had to add by hand, and I just thought, gosh, there's got to be an easier way.
Hey, that's a lot more than 10. Come on.
Yes, well, we get.
You were doing 10 and 10. I'm trying to copy that here. I can't keep up with you.
These are just the ones requested. So now I've just got to go, and I'll show you the RRG.
Okay.
But as you can see, we do get a lot, and I had to close it out a little earlier here. Okay, so we're going to just add all of these, and now that I have them, let's get to the RRG. So we have 30 to choose from here. So I'm going to let you help.
Right.
And let me know what I might need to do to make this easier. Do we want weekly or daily?
Well, everybody's pretty much on the show. Let's do daily because that gives the shorter term the shorter term picture and a little bit more action.
Okay.
I usually do fit. I use the control button, bottom right, fit.
There we are.
With this number of securities, I would bring the number of trading days on the tail to, let's say, 5.
Okay.
Yeah, 3 or 5, yeah, something like that. And then fit again.
Okay.
Fit. And then a couple of minuses.
Okay.
Couple of minuses. Yeah, there you go.
All right.
Okay, so TRZ.to, definitely.
Okay. Pick 8 because I've got our first one's already decided, and the second one will be what's most popular, which is, let's see, what is the most popular? So you don't have to look at that. Looks like Micron and SLV are the top 2. So I'm gonna put in SLV just because we have talked about. I know we talked about tech earlier. All right, so let's.
TRZ. I'd like to look at Twitter because of the direction and the length of the tail. Snap, not sure. I'd like to look at APPF because that's pointing in the right direction. Same goes for HPR, still in leading, pointing to the right direction. I'd like to look at WD. So that's Western Digital, probably.
Yep.
Still strong. Weakening. Maybe it's starting to curl over, but we need to look at the chart to see that.
Mm-hmm.
All that clutter in the middle, I'd like to avoid a little bit. I'd like to look at BMY.
Okay.
Because that's pointing down there, and then what's the other one? Is that NAII? Is that the one?
Yes.
That's that could be interesting.
Okay.
Because that's moving.
One more.
Wow.
I mean, we could throw Micron in.
Yeah, you can do Micron, or if you zoom in, yeah, then we got a little bit better of a handle. Oh, that's XLF that's going through, and JPM are going against each other. In this setup, I would not do AXP and Apple because they're so close, and the yellow ones I can't even read.
Mm-hmm.
Maybe, which one has the longest tail? It's Amazon and REMX in the blue quadrant. Which one is? I think it's Amazon that has a long tail.
Yeah.
You can just highlight Amazon. Yeah, there you go. Yeah, Amazon might be interesting to look at because that's starting to pick up again and move in the right direction. And it's a big stock, so it can drive the market.
All right. Then away we go, Tom. I think we've got our choices.
Boom. Okay. What's first?
First one, BHP.
All right, BHP. Let me go ahead and grab the screen. Okay, yeah, definitely strengthening. Of course, it is in a group that's strengthening. Since we've seen oil prices and energy moving higher, you can see BHP has had a huge move here, moving from key support down around 43 to 43.50 up to about 48.50 and challenging the recent highs. So if I was annotating and looking at this chart, I think the 2 key areas for me are going to be the price resistance that was established second week of January. And then clearly we have some great support down around 43. So I think we're moving higher. We had a trend line where we were drifting lower back to support. We've broken that. I think we're going to test that 49.50 level. No guarantees we make the breakout, but I think because crude oil is breaking out and because the XLE has finally started moving, I think BHP will probably follow suit and break out as well. It's just one of those things, and this gets back maybe to my workshop coming up tomorrow, because the comment that I based this workshop off of, someone said, well, you know, a lot of times in uptrends, you don't like to get in because they're getting close to a resistance level. So how do you play consolidation versus breakout? I'll save some of that for tomorrow, but I just don't like to buy right beneath a resistance level where I know prices have turned. So I like the stock. I just don't like the setup for a buy here.
All righty. The next one, remember, was SLV. That was our most popular request.
Right, SLV.
Mm-hmm.
Consolidation. I think a lot of this boils down to what you think of the dollar. And for me, I think the dollar is still in a bullish pattern. I still see the treasury yields going higher here in the U.S. relative to other areas around the world. That should strengthen the dollar. So I'm skeptical. I do recognize that we're in a nice short-term uptrend in silver. We've been there before. and we haven't been able to sustain it, mostly because, in my opinion, we're still in a rising dollar environment that started back in 2011, despite the fact that we've struggled for about the last 15 months on the dollar. I still think that longer term uptrend's in play. So I have issues doing anything with many areas of commodities. The silver, I think you'd have to watch here to the upside around 1660. The recent lows to the downside, I'm going to say around 1530. I think we're in a trading range, and that is the area I would trade until we see a breakout or a breakdown one way or the other.
Excellent. Now for our Canadian friends, TRZ.TO. And you can see that was, let's see, it's a transportation, industrial, transportation industry.
All right, I'm going to go take it out just a little bit further. I'm trying to see where this support, this breakdown on the heavy volume, because definitely we have started to strengthen again on a relative basis. And I like this rising 20-day test that was successful so far. Probably it looks like as you get closer to 950, you may run into some more sellers. So I'm looking at the double bottom right here that you saw back in 2017. And then we gap down on heavier volume just below that level. And as we come back up, I think, and then you got the 50-day moving average as well. I think we have a shot on this move to get up to 950. Beyond that, I'd have to see the breakout and see the volume coming up to confirm it.
All righty. Next one, Twitter. TWTR.
Yeah, I love Twitter. Twitter pulled back. I think the fact that Facebook got hit so hard, that was one of the problems with Twitter. I think a lot of those online or internet stocks went down in sympathy with Facebook. But I've pulled up my relative chart so I can give you an idea of, and we've talked a lot about Twitter. I liked it at gap support. And so let me annotate this. And right here is your gap support. And I want you just to see how we gap down right to the gap support, put in a reversing candle, and that's where this uptrend began. And as you look down, that's also where internet stocks began to perform well. Twitter, relative to the internet stocks, was on fire earlier in 2018. We pulled back a little bit on a relative basis. Internet stocks, well, actually Twitter versus the S&P 500 also pulled back temporarily, but you can see this is a stock that has been outperforming the S&P over a longer period of time. And now we're starting to see relative strength in the internet stocks. So you have one of the best internet stocks, in my opinion, moving higher in conjunction with strong performance by the internet stocks in general here in April. So I like the chart. I like the stock. I think if it continues to pull back, I suspect we're going to see some support around $30. That was prior support. We broke down. It was prior resistance, and then on heavy volume, we just broke above that level. So I think the rising 20-day moving average in $30 is your support to watch.
All right. Next one, APPF. And that is software.
All right, APPF. I'm going to go ahead and pull this one up as well on that relative chart, and mainly just to show you that this is one of the stronger areas in the market. I mean, Julius has just done a great presentation on RRG, how you can look at relative strength. I spend a lot of time and have spent a lot of time using these relative strength lines on the sharp charts. But here is the absolute value in the software space, which you can see has been very strong. And then the software relative to the S&P 500. When you've got a group that's moving like this on a relative basis versus the S&P 500, it's a group that I would look for internal strength within. Now, APPF had been downtrending for a while relative to the software group, but it has just started to outperform, which I like. It's also cleared a triple top here at about 45.5. So I'm going to annotate that. I think as long as it continues to hold that level, along with this rising 20-day moving average, I'd be okay in this one. I do also want to point out, though, that for me, the volume maybe is a little light sometimes. Looks like some of the daily volumes go below 100,000 shares. But if I ignore the volume, I think this has started to become a strong relative performer. I would be looking for a test of $52. I'd take profits at $52 to see whether or not we can get through at that point.
All right. The next one is HPR, High Point Resources. It is in the exploration and production industry.
All right, HPR. Well, I like the breakout. We got through a key gap resistance and price resistance zone. So I always like to see that. And you can see here, this was the price, the reaction high off this huge gap down with heavy volume. We really struggled getting back up through about 550 coming across here. Once we did it, these pullbacks have been holding 550, and we've since gone up and taken out gap resistance, which is the top support line here. And that was from that gap down again back in December. So I think 550 to 570 was really key area of resistance. We saw a battle there last week and into the early part of this week. Now we have broken out on increasing volume. PPO looks good. I believe the stock is going to make a run up here for $6.80.
All right. Next one is WD, Walker and Dunlop. Actually, that is a mortgage finance industry.
Yes, and I'll tell you what, I'm going to bring this one up on the relative strength because this is in an incredibly weak group, but it's an incredibly strong stock within that group. So I guess it just depends on whether you're comfortable trading a stock that's in an incredibly weak area of the market. But let me go ahead and annotate. And first thing I want to do is just pull up this relative weakness that we see in the mortgage finance area. And that is since December, we have been going straight down relative to the S&P 500. So it is not easy to find a stock within this group that's going to outperform the benchmark S&P when the whole group is lagging like this. WD somehow has managed to do it, though. And, again, it comes down to personal preference, whether you like trading a stock that is so hot within a group that's so weak. But there is your relative strength versus the S&P on WD. I think it's a mixed picture here. No denying the strength on the chart. Just understand that it's in a group that has not performed well. So the recent lows here around 58 also coincide with that rising 20-day moving average. I would keep a tight stop just because of the group that it's in and the fact that it's been performing so weak. But volume trends look good. The stock itself looks very good.
All right. Let's see. Bristol Myers Squibb Pharmaceuticals, of course, BMY.
All right, BMY. Well, another one we can use the relative chart for here. What you're going to see is a stock that is in a very weak group, and it's a very weak relative performer. So let's just annotate that. First of all, you can see from an absolute perspective, look at the stock. I'm trying to find the support area here coming across. There we go. So you can see first of all, on an absolute basis, we collapsed once we went through 59. That had been an area of where we had held for quite some time. We had gap support right around 59, a couple of 2 or 3 lows at 59. Finally, when we broke, look at the volume coming in to support this move to the downside. We are approaching another area of support down just above 50. So it'll be interesting to see if we get a turn there. But one of the problems I'm having is the fact that, first of all, the group that we're in is weak. BMY relative to this group has been extremely weak. So not only are we going down here in the group, but we have one of the worst performers. And you can see what that translates into: significant underperformance of the S&P 500. And pharmas have continued to be weak throughout the early part of 2018, just as they were throughout the second half of 2017. So I think all in all, looking at all this, unless you're trying to catch a falling knife, I see no opportunity here.
Okay. Let's see. Second to last, NAII. And let's see, yes, natural alternatives.
Yeah, the first thing that stands out is the volume. I mean, this is just, there's no volume whatsoever on the stock. So if I was annotating, I would probably just highlight this, the fact here that, I mean, when you're looking back several months and the highest volume is contained within 70,000 shares, that is going to be the epitome of a crazy volatile stock. I mean, just take a look at the stock. First of all, the trading range isn't that wide, but here on this particular day, it looks like maybe it was April 4th. Look at this candle, and you look down at the volume, and there's almost no volume. And unfortunately, that's what you have to deal with a stock that's not very liquid. So if I just ignore the fact that it's illiquid and just take a look at the technicals, it's a stock that lost its 20-day moving average. back in the second week of March, and you can see each one of these moves back higher to test that 20-day moving average has failed. And so I don't see any reason to be in it at this point on the long side. At a minimum, I'd have to get back up above that 20-day moving average.
All right. And then we're going to finish it off with that little known stock of Amazon.
Yeah, that little one.
Yeah.
The 800
yes.
million or billion dollar
gorilla in the room.
Exactly. Yeah, I mean, it's strengthened. It's gotten back up above its moving averages, which is good. You can see the volume starting to pick back up again on this move to the upside. It held the prior low. Folks who were looking for a pullback in Amazon got one. The problem is normally it's going to be associated with news stories. I mean, there's normally something that comes out. I know for a while President Trump was going after Amazon, and that was in the news quite a bit. And of course, the stock was getting hit. But many times it's these stories and the scare that generates the opportunity. And Amazon went back, held on to price support, has reversed back up. I think we're going to see a test above 1,600. And ultimately, I expect to see Amazon make another breakout. I like Amazon.
All right. Yeah, it's looking pretty good. And that concludes the 10 in 10, and there are your symbols listed right now. I will get those up to the Market Watchers live chart list after the program, so you can go there and see all of Tom's annotations. There's also links at the bottom of every recap that I write for Tom's relative chart now, my PMO scan, all those lovely things you always ask us about in email and on Twitter. They're right there in the blog and at the bottom of the blog entries. So I invite you to go check those out. And with that, I'm going to grab the screen so that we can talk about something that is coming up in August.
Really? Is there something coming up?
Yeah, I know I have something important to go to. And that would be ChartCon 2018. We're going to concentrate on reducing risk in uncharted waters. It is an online conference, so you do not need to even leave your house, your office, whatever you'd like to do. And you will get pretty much sort of the same feeling that you do when you watch our show. You will also have all of those videos to see after the fact. So that is excellent. The main thing I do want to let you know is that early bird pricing is going to be ending very soon on May 5th. So you probably would want to go ahead and take advantage of that $100 discount so that you can go. And let's look here at the speakers. You can see we have quite a few.
The lineup is amazing, especially day 2. You know, we've done this before and talked about this before, but after everyone listened to Julius and the presentation he just did and how amazing it was, I think that's the reason why we've got Julius as that final speaker. We're bringing him in. Julius, the closer. We talked about it.
The closer.
No pressure, but we're going to keep bringing it up.
Yeah, I know. I'm lost for words.
Yes, and you get to follow Martin Pring. That's certainly no easy job either. So.
Yeah, there you go. We're looking forward to it, though, for sure.
Yep.
Yeah, me too. Me too.
All right. So do check that out. It's at stockcharts.com/ChartCon, and you'll find basically this page that I just went over for you. And let's go ahead. And I'm going to now go and we'll check out our candle glance and see what's been going on in the market.
There was one question I saw, and I think it may have been in our survey responses. Someone was asking about ChartCon and how long the presentations go and when we're going to start and end each day. I know from the last one that everybody spoke for about an hour.
Mm-hmm.
So I'm assuming it's a 45-minute to an hour kind of presentation for each of us. And just based on the number of speakers that we have each day, that would kind of make sense. And I believe we started, I don't remember if it was 8 o'clock Pacific time or maybe 9 o'clock in the morning Pacific time. But
Yeah.
you can kind of figure that that's going to be the ballpark.
Yes. And again, all of that you're going to have recorded as well. So you can go back and rewatch any of those sections maybe that you missed or you just want to catch a little bit more information about. So, and with that, let's go do this market update. Hang on here. And yes, we are seeing my screen at this point, as far as I can tell.
Yes, you're good.
Excellent. So I'm just going to take us to the candle glance from the Pro Control Center. And you can adjust these. This is pretty much what you mostly will want to look at, but I like to add the Canadian markets for our friends there. And then I'll add just something of interest. I know we were talking about XLF in the 10 and 10 as a possibility. So let's go ahead and we'll add that just to see what's going on. These are 2-day, 10-minute charts, I believe, 1-minute bar charts. So just to give you an idea of what we actually are looking at. So you can see we were in kind of a consolidation zone yesterday at the end of the day for most of the major markets. And we've started our way back down out of that zone. The Dow really did make a move it got back to positive territory, but could not hold that and is now falling and setting new intraday lows. See the same from the S&P 500, NASDAQ. Russell 2000 also struggling right now, setting intraday lows. Canadian markets, similar situation. They are down. Tried to make a comeback here, but we are starting to lose that momentum yet again. Treasury yields are up, as we were talking about earlier in the program, 2.917 currently. UUP formed a flag here, so it does look like it wants to continue higher. I've been waiting very patiently. Well, I don't know if it's patiently for a breakout on the dollar. I did write about that yesterday. Maybe we're finally starting to see what we've been waiting for. Commodities are lower on the day. As you can see, oil made a really nice run intraday, but did turn down and is now back toward intraday lows. It's actually lower on the day, reading at 1381 for USO. Gold dropped, but making a comeback, trying to get back to positive territory right now. And the VIX is rising, although we're only looking at a reading of about 16.7, which isn't that elevated in the grand scheme of things. But the fact that it is rising says that there might be some concerns out there. And here you go, XLF forming somewhat of a double top today and trying to make a move lower, but clearly doing better than the majority of the market, which has been down, as you can see. So the financials are doing better than most of the markets at this point, holding them up, I'd say. And with that, I'm going to complete the market update and under the radar. I have quite a few, but I'll go quickly through them. So these were the ones I picked up. I ended up with about 20, I think this morning, about 28, 30 stocks that came up on one of my PMO scans, and these were all in there. Under the radar, we're sort of looking for stocks that are showing some improvement in momentum. Maybe they've been basing for a little while, and now they're starting to break out. So I look at them as under the radar when I see a PMO that's now turning up after it's been going down for quite some time. So that's pretty much where I got this list, and I've already annotated them, so it shouldn't take me too long to get through these. And ASGN was the first one. It's sitting up here on that overhead resistance. So we haven't broken out just yet, but I'm seeing, and the thumbnail makes it more clear, this move now on the PMO. It's been rising. This will be the third day. And you can see that volume OBV looks great. And of course, you're looking at a high scooter rank. So I thought this one was interesting for under the radar. Cognizant Technology Solutions was another. And you can see it's in a bit of a trading range here, but we have that rounded bottom. And we've now broken above that previous high that we saw back in March. It has come back down. But, I don't mind that, especially when I see a PMO buy signal now. When I first pulled this chart up, we didn't quite have the buy signal. So interesting to see that execute intraday. So we've gotten that big OHLC bar, but now we're trading near the bottom. So I think that might be an excellent situation. Okay. Fiserv was another one. And we got the breakout. We're sort of getting a pullback now. I think you can make a case for this being a little bit of a rounded bottom, but mainly you're in this trading zone. We busted out of it, and we are pulling back a bit. The PMO is looking a little bit suspect now. It was looking better earlier when I ran the scan. It hadn't flattened itself out, and now we have gone back below this resistance line. But I think this one would be worth keeping an eye on. Flow, SPX flow. And I'm going to put this in full quote because I'm not that familiar with this here. Okay, industrial machinery. All right. Again, you can see that PMO is starting to flatten out, but I think overall this chart looks pretty good. You're sitting on some very difficult resistance to bust above, but it's holding that rising bottoms trend line. It did poke out earlier above that overhead resistance, but overall you can see that this is an ascending triangle. We did get the move out of it, and we are pulling back to this support level. If we break down, I'd say below that 20 or even the 50, certainly take it off the watch list. But right now I think it's an interesting play. The other three I want to leave you a little bit of time. And here we go. I have another ascending triangle. We got the breakout yesterday, but it did pull back. We're continuing to see somewhat of a pullback here, but you can see that 5-day EMA in the thumbnail here, just about ready to pop up above the 20. And that would give me a decision point, short-term trend model buy signal. So I like this setup. It's holding above this 20-day EMA, but keep an eye on that 50. I think that would be where I'd probably set my stop if I were to get in here. But nice PMO turning up. It is flattening out when you look at it here, but looking in the thumbnail, you can see it is still moving higher. And look at that really nice OBV volume setup. Really like that breakout there. And you can see it just increasing here on the end. Really nice. And of course, your scooter is in the hot zone. All of these have scooters, I believe, in the hot zone because that was the scan that I ended up using. And we can see proficient. And we got that big breakout, and now we're pulling back down. I'd be a little bit worried. I want to see maybe the candle later today. I don't follow those that closely, but a shooting star would worry me here. After that break, it would be a failed breakout above resistance. But the PMO is suggesting that we're going to see the breakout. It is flattening just a bit. Look at the really nice OBV volume here, pushing upward and making a higher high than we saw before. So I think that is also good news to see that increase in the volume on the OBV. And finally, UHS, Universal Health. And again, another ascending triangle, another PMO that's turning its way up. The momentum is starting to build. And again, volume behind this, scooter rising. These are all, I think, really interesting ones that would be normally under the radar, except that you're watching this. And our scan brought it to our attention. And I'm going to pass it to you, Tom. Did you have a few you wanted to look at?
Yeah, I'll take a couple of them. I'm taking a little bit different view as I go through these. When I was looking at the under the radar, of course, it's earnings season, and we've talked a lot about some of the big companies, and how they've done from an earnings perspective. But there were some other companies that aren't quite as big that I think have done very well, and I thought I'd bring those up on a relative chart basis. Commerce Bank shares, you can see as we were moving higher, of course, the banks were moving higher. On a relative basis, this smaller bank, which I think is located out in Missouri, it's a regional bank. But there, it was definitely moving higher. It just wasn't moving up as fast as the overall bank index. And as a result, we had this downtrend. But you can see that's really changed here in the past couple of months with CBSH making a huge move with its earnings report and breaking out to new highs, even though, as I've pointed out earlier in the program, banks overall have been really struggling and trying to hold on to support. So I think we do have a really nice looking bank. And even though the banks recently have been underperforming the S&P, I think all of this underperformance has been occurring while the 10-year Treasury yield has been consolidating. As I mentioned earlier in the program, I think banks will move higher to play a little catch up with what's been happening in the bond market. And as a result, I think CBSH is one of the leading stocks in this space. And again, it's one of the smaller companies that you might not consider in your trading. TXT, I wanted to pull this one up. We've mentioned it earlier. Here you can see the big gap up with massive volume. This was earnings related. We had consolidated for a few months and we made a breakout. It is in the aerospace group, which is holding up pretty well on an absolute basis. And when you go down to the bottom, you'll see that aerospace has been one of the leaders over the past several months. But TXT has broken out on a relative basis to the S&P. It also has broken this downtrend that it had relative to its aerospace peers. So I think this is another one that looks kind of interesting. And then the final one I had was Celanese. Ticker symbol is CE. And this one is in commodity chemicals. Now, this one, I like it. It's under the radar, but I need to see a breakout because with earnings, we saw the huge move up, nice volume. But look at these tails trying to get above that prior high. Weren't able to do it. We could see a pullback here on CE at this point. And the thing that's really bothersome, you can see on a relative basis, relative to its peers, it's doing great. Relative to the S&P, it's doing great. One of the problems is the group itself has been struggling. We've seen some strength in April, but it is starting to roll back over. The fact that the group overall has struggled relative to the S&P, and we're at a major resistance on this individual stock, I would wait. I'd want to see that breakout, but it is one I'm keeping on my radar, or maybe under my radar, or under your radar, something like that. Anyhow, with that, here is the summary today. I went over a few stocks, and you can see the stocks that Erin looked at that she feels is under the radar. Julius, I do want to thank you for stopping by. If you're still with us, you still hanging in there?
Yes, I am. I had to unmute myself, but I'm still here.
Okay. I just wanted to say thank you for stopping by. We always enjoy having you on the show. I thought your presentation today was spot on, especially those two screens side by side, because that's, we always talk about when we're looking at our charts to step back and look at the big picture. And I think you showed how you can do that with RRG, which is really fascinating.
Yeah, well, you could also do it with a weekly and a daily normal chart. Just split your screen in two, put two browsers there, boom, you're there. So,
yep. Absolutely. Hadn't thought about doing that with the RRG. So, you got to come in here and, show us how to do these things. So it kind of spurs some additional ideas on how we can beat the market.
Every third Thursday of the month is the planning that I'll be here. So you just be prepared.
We are prepared. We can't wait for the third Thursday in May now.
Very good. Very good.
Yes, we'll mark our calendars and everybody else can as well.
What's your thought on the market, by the way, Julius? Just kind of in closing, what do you think?
It's still incredibly strong from a longer term perspective. I stopped calling any tops many years ago because it's a futile undertaking. As long as this move is in motion, and I don't see anything that's indicating anything contrary. Every down move that we had was so short lived and was bought so rapidly again that I'll just stay with the trend and see where it leads to. And trend following means that you got to follow it and try to pick up the signals when it starts to roll over and go down. And hopefully we'll have a little bit of time to prepare ourselves for that. But I don't think that it is the time right now to do that.
Okay. Well, it's always a pleasure, hearing from you. I agree with you. I think it is very difficult to call a top, especially when you're in a long bull market. It can make you look silly at times. But we are still consolidating. There's no guarantee we're moving to new highs. I think we are, but we'll see. Time will tell.
For sure.
Okay. Well, I guess that just about wraps it up. Erin, you have any final thoughts?
I've got my S&P chart up here, and I was looking in the thumbnail, and I wrote about the fact it looked like we might have an island reversal. Well, I mean, the good news here is we pulled back and closed that gap. So now we can get started again, and we're sitting on that 50-day EMA. So, I think, we are short-term overbought. Maybe if we get a little more pullback to the 20, that'll help my indicators.
Yeah, I think, too, one of the things you look for in a sideways consolidating market versus a strengthening market is a lot of times you just kind of keep going up above and below these short-term moving averages. So one of the things I'll be watching is to see on any weakness whether or not the S&P holds its rising 20-day moving average.
Yep. Tomorrow you got a workshop.
I do.
That's it for the weekly schedule. I know next week will be packed and full. but you'll have to wait till Monday to see what we have in the store.
I thought trading breakouts versus consolidation, and the way you handle both was a timely topic, given all the consolidation that we've seen here. I mean, we do have some stocks that are making breakouts that we pointed out here on the show, but there's a lot of stocks that are consolidating. As Julius pointed out, that Caterpillar chart looks really interesting, and it's been consolidating for a while. So the whole idea of the workshop tomorrow will be on whether, how to approach trading breakouts versus consolidation. I want to thank the survey responder that suggested that topic. All right. And with that, I guess we are on, to the end of another day. Again, I want to thank Julius for stopping by today. We look forward to him revisiting us next month in May, and we'll get an update on the RRGs then. I want to thank all of you for being with us today. Please remember to complete that survey as you exit. We do love to get your feedback, to hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. Hopefully see you back here on Friday. Happy trading.
Bye-bye.